Okay, it is 2 o'clock and we are going to get started. We have over 60 people here so far. We were just talking before we opened up the waiting room. We have 177 people registered for the finance peer community. It's amazing. We normally get 30 to 35 people at the professional conference when we hold it in person. So very impressive. Overall, over 3,000 people registered for the conference. So welcome. This is the Finance Peer Community Session, Effective Financial Reporting at All Levels. My name is Bob Kimsel, and I am the CFO at JCC Association of North America. This session is being recorded. If you do not wish to be recorded, you may turn off your camera, but we encourage everyone to stay visible. If this is not the session you intended to join, return to Spot Me and select a different session. Joining me today is Dina Rudolph, JCC Association's controller. Dina will be helping me and providing tech support during this session. Our names appear as hosts at the top of your participant list. You can chat with either of us to address any needs or questions. We aspire for every person to feel they belong at ProCon 21 and are working to build inclusive spaces in which all people feel welcome, respected, safe, and fully included. To that end, we encourage you to consider the following suggestions as we begin our time together. We invite you to rename yourself in Zoom with your name, agency, and if you're comfortable, adding your preferred personal pronouns. We have enabled closed captioning, and you have the option to turn it off using the button on the bottom toolbar. Actually, did we enable closed captioning?
Yes.
I don't see it. Are people seeing closed captioning? Okay, very good. Please reach out to Dina or me in chat if there's anything we can do to enhance your learning experience. We are thrilled to offer this multifaceted conference at no cost to our JCCs, which was made possible because of our very generous ProCon 2021 sponsors. Each sponsor believes in the JCC movement and the incredible work JCCs accomplish day in and day out. Their representatives are proud to be with us to share their expertise and offerings. We hope you will join us in showing appreciation for their support by visiting their booths in our virtual vendor hall. We also encourage you to connect with them anytime during the ProCon and beyond. During the conference, you can use the chat feature to connect with them, and after the conference, reach out using the contact information provided. Today, I'd like to share a little bit more about our finance peer community sponsors, Marks Paneth and Traction Rec. Marks Paneth is a premier accounting, tax, and advisory firm ranked by Accounting Today among the 50 largest accounting firms in the nation and among the top 10 in the Mid-Atlantic region. With more than 60 dedicated nonprofit industry professionals, Marks Paneth's nonprofit government and healthcare group is committed to helping nonprofits meet their compliance requirements and protect their excuse me. Dry throat, I'm losing my voice. Not good time. Dina, I might have to ask you to step in. I'm very excited to have Matt Estersohn, a partner at Marks Paneth, join us for this session to speak on considerations when preparing financial reports. Next is Traction Rec, the award-winning membership and program management solution on the Salesforce platform that was built with JCCs for JCCs to empower your community impact. JCCs use Traction Rec and Salesforce to understand a full view of an individual, including relationships, interactions, and transactions. We will hear from some of these JCCs in the second half of this session. At this point, I want to turn it over to our presenter for the first half of our session. Matt Estersohn, as previously mentioned, is a partner at Marks Paneth, JCC Association's audit firm for the past 15 years. Matt was also with us 2 weeks ago for our pre-conference session as a subject matter expert on the employee retention tax credit. His full bio is in the Spot Me app. Submit any questions you have for Matt to Dina or me in the chat area, and we will collect those and come back to them at the end of Matt's presentation. Matt, thankfully, I'm going to let you take it away.
Thank you, Bob, and good afternoon, everyone, or afternoon at least for me. Thanks so much for having me. As Bob said, my name is Matt Estersohn, audit partner with Marks Paneth, and we're a full-service accounting firm, but our nonprofit practice really specializes in mid-size and large nonprofit agencies. As Bob mentioned, we're proud to be the auditors of the association, and particularly given the year that we've all had, which has really spotlighted the need in our communities for bringing each other together and everything that you do. It's really, we thank you for having us here. Also, my spare time, I volunteer on the boards of 2 nonprofit organizations and the finance committee of my synagogue here in New Jersey. And so when I speak a little bit about board reporting, it also comes from the other side of the table, so to speak, and some volunteer work with boards. And so I always find it funny when accountants say things like this, but I'm happy to be speaking today on a topic that I really am passionate about, which is internal financial reporting. And the reason I care so much about it is that it gets to the heart of why does accounting exist? Why does what we do matter? Why should anyone care about things like financial report? And the answer is that accounting communicates information about an organization to help you make decisions. And so really a lot of what we'll be speaking about today is the guiding principle is what is going to help the users of the information. In any level of financial reporting, and I'd include external reporting and the audit environment in that, it's critical to think about the users of reports and information. And let me speak for just a minute about external reporting, specifically about audited financial statements, which I'm sure many of you will have to file, and then Form 990 as well, which I would guess most of you have to file. In those cases, although there's still plenty of reporting options, financial statements are usually prepared in accordance with GAAP, generally accepted accounting principles, and the 990 is prepared in accordance with IRS rules. So those standards are critical for public view so that anybody, an informed reader, can pick up a set of statements and interpret them, kind of compare apples to apples. But they're often not useful, or at least not sufficient for internal use and internal decision making. And part of that is due to timing, 990 that you have once a year. And particularly if you're doing benchmarking work to other organizations, you're looking at information that can be over a year old. But also, I'd say GAAP basis statements are a little bit complicated to put together on an immediate and an interim basis. So from a timing perspective, it's not going to make sense, even if it's not audited or reviewed, but to have full GAAP basis financial statements done often. So today I get to speak about internal statements where there are really no rules other than that guiding principle is that what will help the users of the information. And so we'll speak today about different reporting levels from program directors up through the board. And before I get started, I do want to spend a few moments on COVID, because when Bob and I were first speaking about this idea, I think I said it's going to be the first speaking engagement I've had in about a year that hasn't been related to PPP, employee retention credits, COVID-specific relief items, and I think most have had plenty of that. Bob mentioned that we had a session a couple of weeks ago where I know there was a lot of employee retention credits, and we have in our virtual vendor hall session, I'm going to be spending about half an hour there afterwards. So if there's any questions, you can feel free to stop by. But I think this topic, realized, is very much related to COVID, that the importance of timely, reliable, most importantly, useful financial information has really never had as much value as when organizations need to pivot just so rapidly. So even organizations that have had this level of reporting sort of down to a science have had to take a second look over the past year or so. And I'm sure you're seeing that even board members who in normal times may not dig into the details of reports have found, given the seriousness of COVID that they've had to really dig in different levels. So I'm sure you're getting many more questions and renewed looks at things. So it's sort of, the timing is sort of ripe to revisit the best practices around what to share organization-wide, and how do you help people make the best decisions based on that information. So Bob mentioned our agenda for today. I'm going to be speaking a little bit about overview of what's important to communicate, examples of what to report at every level, and some strategies for how to do that. I'll talk a little bit about budgeting best practices and some non-financial information. And after the theory, I know we have examples from CFOs that will share a little bit about what they have been doing. And from what I've seen, some of the reporting is just excellent. So that'll be really, I think, useful to get some tangible reports and dashboards and those sorts of things. So I'm going to start off, and I'm going to spend some time here because I already mentioned GAAP. For a lot of CPAs, and particularly if you've been an auditor in the past, GAAP rules are just so ingrained in our minds that they could be hard to step away from. But I see three major areas. I'm sure there's probably more, but three areas where GAAP can distort results from what you would really want to think about or consider on an internal basis. And so these should be factored in somewhere into internal reports, into budgeting, and maybe as reconciling items, but something that I think should be considered. So one is capital items, and on a GAAP basis, so property and equipment of any sort of threshold should be capitalized and depreciated over the useful life, which makes total conceptual sense from a reporting standpoint externally, except that you do need to budget the cash cost of those items in year one of purchase. And so many organizations have a capital budget, and that can be a reconciling line item into a normal budget or internal report is kind of a typical way we see it. But a caveat about that, and particularly if you have buildings or very long-lived assets that you're leasehold improvements, anything that's depreciated over a decade or more, is that it could be very easy to just say depreciation is non-cash, we're going to disregard it. But that does represent real use of an asset, and at the end of life, there's going to be repair and replacement costs. So as long as you are factoring in the cash needs for future capital expenditures and deferred maintenance and all the facilities work that you need, as long as that's considered, I think it's fine. But depreciation, there is some economic substance that it actually represents. So even for organizations who sometimes budget for that on a cash basis, which I find appropriate, you need to make sure that you're correctly forecasting any sort of major capital items for the future. So that's one. The second is debt. So principal payments of debt obviously do not show up on a GAAP basis income statement or statement of activities, but those are items that you need to budget and plan for from current revenues and finance. So that's important to make sure is included in budgets and forecasts. And the third is contributions receivable, or long-term contributions receivable, which has kind of been a little bit of a thorn in the side for the 20 or 30 years that it's been part of standards. And it's always something that takes a little bit of explanation for lay leaders or somebody who's looking at nonprofit statements for the first time. It's not the most self-explanatory, but under GAAP rules, long-term pledges are recognized in year one as restricted revenue and then released from restriction in future years. Well, on a managerial basis, you're using those future cash flows for future expenses. So it's just not a useful presentation. So I sometimes see adjustments to internal numbers there. When I often present the GAAP basis statements to our audit committees and boards, we don't always only talk about the total column, the statement of activities, but also the unrestricted or net assets without donor restrictions columns. And so I think that often represents a better metric of what actually happened during the year. So it's just another thing to think about. I said three items. I'm going to add a fourth because I think it's in a later slide. And if you're lucky enough to have investments or even an endowment, investment earnings on a GAAP basis, you have to value investments at fair value. But it's obviously pretty impossible to forecast exactly what investment earnings are going to be in any given year. So rather than, and beyond that, endowment funds also have spending policies, or in some states they're governed by law. New York is probably the strictest on that. But if you have, and you should have a spending policy in any sort of organization-wide investment accounts that you have. So those assets, I think the investment policy generally makes, or a spending policy generally makes it predictable what you're going to appropriate into a budget in any given year. And so that could be part of the budget rather than the overall, trying to guess at the overall interest and dividends or unrealized gain, whatever you would pick up on a GAAP basis. So the entire concept that I'm getting at with those items is to focus on the cash, and that your internal statements need to drive the message of sources and use of cash. Even on GAAP basis statements reviewed by boards, I spend time on the statement of cash flows, which I think many CPAs tend to gloss over in nonprofit statements, but I think that often tells the story, tells your story of what happened during the year better than a lot of the other schedules and footnotes. If you look halfway down the statement of cash flows at the net cash provided or used by operations, that is, if not the most important number on the financials, I think one of them. And it's just, is your core business generating or using cash? It's something that every board member should know when they look at. So in that spirit, you really need to communicate liquidity as part of the financial information. And this has been something that we've been stressing for a long time, but it's sort of pandemic accounting, or really any accounting in any period of uncertainty. One of the lessons that has been critical over the past year is the importance of liquidity, that liquidity entering a pandemic represents flexibility and the ability to it gives you options before you have to make any budgetary decisions. And so it's important to measure constantly. And so if your internal statements don't have any level of balance sheet reporting, particularly to the board, I think that's always my recommendation number one, to make sure to factor in a balance sheet. And so I'm going to give three sort of liquidity measures that we often speak about and reference, just as a kind of data point for you. And we'll find a way to make these slides available. I added a final slide at the back here with a cheat sheet of these measures, so you don't need to memorize them if I speak too quickly. But one is the current ratio, which is current assets divided by current liabilities. And current assets is anything on your balance sheet, any assets on your balance sheet that's convertible to cash within 1 year. Current liabilities, any liabilities on your balance sheet that are due within 1 year. And 2 to 1 is generally a healthy ratio there, but the details will depend on your size and programming mix. For example, and I don't know how many this will apply to, but if you have government contracts, Head Start, sometimes anything that's funded on a reimbursable basis, obviously it's a little bit different because you're getting paid after the fact. So the details and the appropriate benchmark will depend on the revenue streams and business cycle. But just as a starting benchmark, 2 to 1 is generally healthy liquidity for nonprofits. So that's number one. Number two would be your working capital expressed as a number of months of cash on hand. So working capital is current assets less current liabilities. What assets do you have that are current and liquid after you strip away anything that is due? And if you divide that by total expenses and multiply by 12, you should have how many months do you have on hand of liquid working capital? And I read a report by a nonprofit advisory group. It was pre-COVID, but the average nonprofit had 3 months of cash on hand. They were speaking about cash instead of working capital, which struck me as really way too dangerous. That the margins at that level are just too thin. So we generally recommend 6 months. I know the aspirant point is generally a year, but I think that's wishful thinking for many. But 6 months is kind of good. Back of the envelope, we're in a perfect world. Where would you want your liquidity to be? And then the third, which is a little bit less of a benchmark, but I find it helpful as a way to think about net assets, is to think about operating net assets on your balance. So if you think about the net assets section on your balance sheet, and GAAP requires you to say what's restricted by donors and what's not. But if you take total net assets and remove anything that is restricted by donors or designated by the board, And then also remove anything that's extremely illiquid, so property and equipment, and if there's a mortgage associated with that, it could be net of a mortgage, as well as if you happen to have a defined benefit plan liability or some extremely long-lived liability that doesn't represent kind of any normal operating use of cash. If you remove all those items, you can come down to what's actually available for operations. And there's no sort of one benchmark number of months of that's a best practice, but I think it's a useful way of useful exercise in thinking about what are the components of your balance sheet, what's really available for management to use, and what are the sources and uses of your liquidity that are out there. So,
Matt,
yes, Bob.
your audio is staticky. I don't know if it's you or if it's something else, but it's intermittent. But it's kind of there's a few times it's been difficult to hear. I don't know if there's anything you can try, but
I'm sorry about that. I'm seeing now that there's comments on it. So I will. Of course, it works during the tech session. I'm going to get a little bit. I'll try to get closer. Is it still there, Bob? Do you want me to move around in my house?
yeah, it's like a little fringe, and then just a few times it just bursts in. It's not horrible, but it is a little bit disruptive.
I'm sorry about that, because I have full network connectivity. I can try to stop my video and see if that helps. And is it continuous? Better now, Bob, or am I still having problems?
Yeah, I mean, it's very, it's very minor. It's like it goes from like a drizzle to, and then it kind of pops in every once in a while.
I know it's always annoying for everybody else. So I'm going to try to move around to a spot that is hopefully closer to the network, and hopefully it improves. But Bob, if you can let me know if it continues.
If it continues, man, maybe you could try. You're on computer audio.
Yeah.
Maybe you could try phoning in and going to phone audio. That might help.
Right. Is it better now, or
no,
still?
It's really the same. It's really the same. If you want to try, just, you can go over the microphone thing and switch to phone audio.
That's what I would
do. We can just wait a minute if you got it. Sorry about that.
No, I'm sorry, everybody.
No need. It happens. Anybody have a joke while we're waiting? Anybody? Renee, I saw you chuckling. You must have something that you saved for just such a time. Okay, maybe not. Jen, you've always got something funny to say. Come on.
Okay, so I am on phone now, Bob. Can you hear me?
Yeah, that's good.
Better?
Yep, very good. Thank you.
All right.
Thank you so much, Matt.
I'm sorry, everybody, about this. This is obviously, we're all in this mode where we do these presentations all day, and for the most part, it seems to work, except I guess when you really need it. So I'm going to carry on, and I hope everybody got the gist of what I was saying, but the importance of balance sheet and liquidity as part of internal statements, particularly to the board member, at the board level, is really critically important. So for anybody from the Northeast, there was a huge social service provider named FEGS that maybe 6 or 7 years ago went bankrupt, and they weren't a client of ours. They don't have any privileged information, but after the kind of lessons learned afterwards were a lot of the warning signs were on the balance sheet, and it's very important to understand what of your asset portfolio is liquid and what's really due. So that bankruptcy was one of the factors that led to the GAAP standards change, where everybody needs to disclose liquid assets that are available for use now. So I think liquidity is always important, but particularly in uncertain financial times. So moving on, context. So internal statements should always provide context. You have the ability to show variances and add MD&A or management discussion analysis, and you should use it wherever possible. I know on the boards I volunteer on, I always find it helpful when unusual items or variances are highlighted and explained right up front. You could probably eliminate some confusion and questions from members right with that. I would expect that most here do some level of program or division analysis and segment reporting, but the point is that you want to identify what programs are generating or using in terms of your overall budget. And you could do that both before and after allocating administration costs to see if are you generating organic surpluses and losses, and as well as are you covering your fair share of overhead with any given program. And finally, non-financial data is really helpful to pair with some of these statements. So membership information, individuals served, employee and HR data. There's a lot that can go in here. I'll speak to some of it later on as well, but I think when we get to some of the other CFO reports and some of the details, you'll see there's a lot of flexibility and a lot of potential. So I want to speak about different levels of reporting and sort of start from the ground up. And I said program directors here. The title is not really all that important. It's for anybody who's responsible for managing a segment of the organization. So athletics director, early childhood, whatever the case may be. But the real purpose is to help that individual run operations and ensure accountability. So if you're going to set a budget for somebody to follow, you need to provide timely and measurable feedback on that budget so it could be adhered to. And what is it that you actually need to show here? The basics are just a P&L with actual revenue year to date, actual budget year to date, and variances, and then a comparison to the prior year. I also find valuable in these kind of unusual years where you wouldn't expect consistency year to year. If you want to see trends, we've been seeing more and more organizations add maybe an additional prior period just for some context of what pre-COVID operations might have looked like. Other reports that you may want to provide to director level staff are hours and overtime reports for any employees they manage. That can be a good internal control, particularly if some employees are running up more overtime than others, or some employees are not fully utilized, whatever the case may be. I think it's possible to come up with plenty more examples here, particularly of non-financial information that might be good to share. But the key is to get people the information they need to perform their jobs. And because the information is needed to operate and you need to give people time to react to the information, my personal feeling is this should be done monthly. And so I usually see this in pretty raw form, which I think is fine. There's an important consideration to prioritize speed, I think, over user friendliness. And that reverses, I think, when you get to higher level reports to the board. But at a staff level, you know, the directors themselves can fill in the context about why the numbers might look the way they do. And in fact, a secondary purpose of a report like this is also to collect information from the people who are on the ground about what actually happened, so then you can incorporate that into higher level reporting. So you can automate sending out these reports monthly if you're able to, but automate it to the extent possible, and then require directors to report reasons for variances of any given dollar amount or percent amount. And that can make life a little bit easier when you get to board reporting, but it also gives you some information on the state of operations and how to run things. So when we get to senior leadership, I think you need to stop just thinking about individual segments and consolidate into the organization as a whole. But a starting point here is to take the reports that board level or director level staff are getting and basically do the same thing for the total organization. And you can obviously, you'll have the breakdowns program by program. And then I spoke a little bit about allocating administrative costs to programs, but here is where you can show basically unallocated results and allocated. There's a few different practices for it, but the point is to create some measurable concept of our programs meeting an equitable use of administrative costs. And for what we see, if organizations rely too heavily on allocated results only, you can make a decision that says, well, program A is not covering their fair share of admin. We got to get rid of it. But sometimes when we see that happen, unless there's a change to admin costs anyway, those admin costs just get shifted to other programs, which may then be running at a loss. So I do think it's important to analyze program activity, both unallocated and then our allocated as well, to give you a full picture of what's happening there. This is the point where I believe it's important to start including balance sheet and liquidity information as well. And if there's significant balance sheet items like receivables, you would want to include details on the components like an aging report or any other subledger. Same thing for any payables or just unusual variances. You might include some backup detail on those. And also you can include reports from other sources of the organization as well, membership development, facilities, HR. At a leadership level, I think is where we typically see the most data that gets aggregated. And so you can really get regular updates from all sources within the organization. And because you're still dealing with staff at this point, depending on the organizational structure, we still see this often as a little bit raw data, but you'll want to include some information from program directors if it's helpful, and some analysis to help other organizational leaders with their work. But really, the concept is similar to the program directors, that it's okay to sacrifice a little bit of cleanliness of the reports for speed, to give you the opportunity to pivot if you need to, just because timing is so critical for operational data. At the board level, when they're doing oversight, I think you can relax the timing, as I said, in order to build some additional quality and analysis into the presentation. So what I think next is I have finance committee, and here is where you typically want to start dialing it back. A program by program, account by account analysis, just too much detail, unless special circumstances really merit it. So often we see these as limited to entity-wide statements unless there's something unusual going on. And in practice, even if you're not doing GAAP basis, often these end up approximating in look the financial statements themselves. I do think it's important to include an MD&A, management discussion analysis, which is, it's done in public company statements, and it's been talked about or threatened for nonprofits and private companies for a little while. But it's all about explaining context around the financial information, as well as any other risks that may not be apparent from the financials themselves, but are important for board members to consider. So as much qualitative information as you can fit in here, generally the better. So when I say include all funds in the third bullet here, something that's extremely important, and some organizations it may not even be relevant, but it's something I occasionally see, and I think it's important to mention, is that if you use any sort of fund accounting, all funds should be included in board level reports. And for whatever reason, I've seen this more in schools and cultural institutions, but if you have a building fund or a capital campaign or designated funds, the ultimate reports should be all inclusive, and then you can give context from there or explain restricted assets. That's fine, but what I inevitably see happen is if you try to only report measures from an operating fund and nothing else, is that there's interfund activity that gets either missed or misinterpreted more often by board members. And in the worst cases, you can have organization-wide deficits that get not reported because they're just not on the statement. So we have, and I'm not gonna go too much into war stories today, but we did take over a particular client that will remain nameless as successor auditors, and for 20 so years, the board had always been shown statements internally that says we're meeting budget and there's operational surpluses. And then CFO retired, somebody new came in and said, okay, we need a line of credit to start thinking about financing. And the board was saying, what are you talking about? We've had nothing but surpluses. And so nobody ever reconciled for them the difference between what was being reported on an operating fund, and then everything else where there were sustained losses. So whether it's on internal statements or whether you do that at a time of an audit to say, here's the consolidated totals, and here's a reconciliation from an operating measure that we show you to the ending numbers. I think that is all, it's critical to kind of ensure that the full picture gets communicated to the board members. But the overall information that you should be trying to communicate here is enough to assess organizational health and then drive strategy decisions. So it could be at a high level. And then finally, the board, and every board's a little bit different, but here can be where less is more. The trend for a while has been towards dashboard type reporting, not just a rehash of what the finance committee gets. So if you pick 10 different measures, financial and non-financial, and stick them on visualizations on one page, you can get a really powerful and informative board report. So typically, some of the financial information you'd want on a dashboard like that is a total surplus or loss compared to the budget, the current ratio that I mentioned, days or months of cash on hand or working capital on hand, days of receivables information, and then some of the non-financial stuff that I think you probably already report in some way, but membership activity, donor engagement, employee retention, or employee metrics compared to prior years. And I know you'll see some of that in just a few minutes, so I'm going to stay away from the dashboard details, other than to say that there's a bunch of different software products that are out there, but it's not really, the software itself doesn't do everything for you. It's about the presentation. So for most boards, I think you can accomplish some of this using charts within Excel and be just fine. But if you do have software that that can connect to visualization sources, then you can get some really cool and powerful automated benchmarks. If not, that's also okay. But you could fairly easily, I think, design your own and say, here's the 10 different measures that we want to report to a board, and keep it at a very high level. But as a legal matter, all board members have fiduciary duty to the organization. And so while you can obviously review in detail with the committees, the board needs to get a financial overview in some form. And so, again, I think the best way to accomplish this is really to focus on liquidity and any major changes from budget or unexpected variances. And that can be, those are the kind of things that can be communicated pretty well in a dashboard format. Again, enough information to plan strategy and make informed decisions, and enough information from an oversight perspective to make sure that management's really carrying out the plans that the board set at the beginning of the year. So I promised, here's my cheat sheet of financial metrics that I went over quickly, because it's I think difficult without my garbled audio to get immediately, and even more so if you were having trouble hearing me. And again, apologies for that. But a couple of liquidity measures, the main gap to internal statement differences that we see, and some things that you may want to consider in your reporting. A quick word, I think I said on budgets, and then I'm going to leave some time for questions and to turn it over to others. But budgets, as we've seen this past year, the importance of contingency budgets and a regular and retroactive review, that you should always be revisiting any estimates and assumptions that are inherent in budgets that are made. And it's not a bad thing to come back to, particularly as our circumstances relating to COVID and everything else are just continue to change so quickly that it's okay to say, here was our budget that we set at the end of last year. Here are the 5 major things that's changed for better or for worse, and here's revised plans. So a regular revisiting of the budget, I think, in these times remains very appropriate. And so with that, I kept some time on my phone, but I think I promised around 35 minutes or so total. So I'm about at my time. and I can check to see if there's any questions, or so Bob or Dina, if you've seen anything, or if there's something that would be helpful to go back to, I'm happy to do it. And if not, I think I can turn it back over to others, and maybe in the interim, I'll try to log out and reconnect, so I get the blank screen and me on a phone. But again, I'm sorry for the connection details, but hopefully it's been clear from this point.
Yeah, it's been fine since you called in, and I just want to say that we only had one question. I think it was about what you just threw up there. Was someone wanted to know where the formulas were that you were talking about, and one of our top finance professionals posted a link to an Investopedia page that has a lot of financial ratios, so people can click on that and find some things, but then you went over it. So if I just want to invite, if anyone wants to ask questions, you can put it in the chat, or if you want to raise your hand, we can call on you if you have anything you want to ask Matt about before we move on to our second half. Anyone? Any questions? Okay, Matt, we will see if we have time left at the end. You have some other things that you might want to show us that are a little bit in the form of different reports that you've seen in dashboard reports, I think. Is that what you said?
Yeah, so we have, we as a firm, so we have some dashboarding software, and generally what we do is more benchmarking for it, because we're external auditors. So we have some uses that I think are interesting to think about with regard to dashboard reporting. So what we do is we connect to the IRS data feeds for the 990s and can show a lot of these financial measures that I'm speaking about in an interactive way. And Bob, you haven't seen this yet. It's in prototype mode still now, but I think it can be instructive, but probably not as much as your reports from other JCCs. So if there's, I think that it makes sense to use time for that. And I'm also, assuming we can work out internet issues, I'll plan on being in our firm's virtual, the vendor hall, and happy to speak as more as anybody would like about that. And I think it's immediately following the session. Very
good. Thank you so much, Matt. You really gave us a lot to think about in that presentation, and I'm hoping you're gonna try to come back in. So if there are questions at the end, you'll be available.
Yes.
Okay. So that was great. I just want to make a transition now. We have 4 of our fellow JCC professionals who are going to share with us some of what they have been doing in the area of financial reporting, and in particular, how they have been using Salesforce and Traction Rec to help them do it. I'm going to introduce the 4, and then they're going to take over and give you their little snippet, and we'll ask questions of them as they go through one at a time. And then at the end, again, if people have questions. So Marina Peterson, who is the Director of Accounting and Administration at the JCC in San Francisco. Jill Davidson, who is the Database Administrator at the JCC in Cleveland. Diane Newland, who is the CFO at the JCC in Pittsburgh. And Jason Doberlecki, who is the Chief Marketing Officer at the JCC in Houston. And I don't know, Jason actually was pulling double duty. He was involved in the marketing session, and I just want to make sure that he made it back. So I don't see him on here yet. So he's going to be at the end. So hopefully he'll be back in before we get to his section. So those are the 4. They're going to go in that order. Marina, I'm going to let you share your screen, and then you can just, when you're done, we'll ask for questions. Then we can just pass it along from you to Jill, to Diane, and then Jason if he decides to join us. Oh, he's coming in right now, actually. So take it away, Marina.
Great. Thanks, Bob. Thanks, Matthew, for that great introduction there to all the financial information. Just to get my screen shared here. And thanks to everybody for joining us today. I'm Marina Peterson. I'm the Director of Accounting and Administration at the JCC in San Francisco. I see lots of familiar names on the call today, and it's such a great audience and lots of people. That's wonderful to see all of you joining us today. And thanks, Matthew, for that wonderful presentation. Myself, as a financial professional, the importance of providing accurate and timely information is more important than ever. I myself am a believer of trying to implement a continuous accounting model in our organization where you're minimizing the month-end entries, but ensuring accurate and complete data when it's actually received. We've got a great panel of colleagues today who are taking their data to new levels and inspiring me to do way more things than I have time for. We are here today to show you how much data you have available already and the different ways you can use and consume data to make decisions faster and with confidence. I'm focusing more on sort of the ideas of data governance, single source of truth, defining attributes, and impact measures. Jill, she's got a great way to improve data integrity. Diane, how you tell your story with data. That's so important these days. And Jason, how you take action with your data. And to that end, the theme, let's see if I can do that. There we go. The theme that we're really seeing a lot of now is really defining what a single source of truth is. And what does that mean? Right, that's the holy grail there, that you would have one place that you would go and you would see it all. We at the JCC, we migrated 7 legacy systems onto one platform, Salesforce, as you guys have heard about before. And as of January 2021, 100% of our transactions are going through Salesforce, and we're only down to 2 credit card processors from 7 or 8 different credit card processors in the past. So that's a huge step forward. But it's more than financial information that we have now. Being able to access the information from its inception to its fulfillment is one of our primary goals. We can access real-time information as changes happen. This could be hourly, it could be daily, it could be weekly, it could be monthly, or it could be annually, but it's available and it's real and it's accurate. We have live data giving us actionable insights that is always evolving. We are learning new things every day. We have hindsight data and time to produce and validate. Using hindsight data takes time to produce, it takes time to validate, and it often leads to missed opportunities. And in the last year, we know how many opportunities were out there, how many we could achieve, and how many we missed. And then back to the financial reporting of month-end variances and year-end audit, and the changes between the actual data itself, the source data, to the financial data, there's often a translation process that it goes through. And in that respect, sometimes you lose some of the information and some of the insight. One of the things we're really pushing for now is how to collaborate on a record right from the beginning, instead of getting all the information in forms and other areas and then entering it in afterwards. So if you start the record in a single system and people provide their information on that record and it grows, you can see that information evolve. You can see where your gaps are, and you can see where you need to find more information out. But it also, more importantly, it allows your organization and the different areas to build the information together. Each person has their responsibility to produce quality data, not quantity data, but quality data. You can automate easy processes, and then you can leave time for that complexity and support when people need more help. We also, one of the big things that we are now leaning towards is defining attributes and impact measures. How many of you actually have data analysts on staff? Formally, maybe, but not really. But to some degree, we all have people that have their knowledge and skills and experience on how to use data, from your marketing teams on how to segment people to your financial team who knows how to look at the financial information and the variances. But it takes commitment and it takes defined measures to actually consume and use that information. At our JCC, we're actually just in the process of implementing a data governance committee and a dashboard initiative. I'm very excited about this one. However, I am also scared. It is a daunting task to try and distill down all of these concepts and all of that information into a dashboard or a report that's usable, that's easy to access, and that is timely. It goes back to, when you get that request from your executive team, well, I want to see everything and I want to know what to do with it. And I want it to tell me what's going to happen in the future. We don't have those crystal balls, unfortunately, but we do have information that can lead us to better actions and to better calls to action for our constituents. One other thing to kind of be aware of is data bias. That's a big concept now that we're actually starting to see come into play. And data bias comes in the form of how we structure our data. Why do people cancel their fitness memberships? Well, they cancel for the reasons that we gave them in the form when they canceled their membership. So you want to stay away from pitfalls in data bias about allowing sort of just that scapegoat answer of other, unless you want to give an explanation. But you also want to make sure that you're not asking the questions in a leading way, so that you actually form them to get the desired outcome instead of the truth. And then lastly, the greatest piece about having all of this information in one system is enter the data once and use it often. Making sure what Matthew was saying about GAAP and other financial measures, making sure that you can actually use your audit and tax reports as part of the initial data entry process. We've really hit home with our development team in one area, the idea of raised, released, and restricted, and how we actually enter in our gift data so that at the beginning of the year, we have the same information at the end of the year for the auditors, and we were able to share that information directly with our audit team. By using a continuous accounting model, you can use your system to enter the complete transaction from the accrual to the purchase, all the way through the amortization, even if it's years into the future. And we're able to start projecting, we're starting this path, but we are able to start projecting out past the year end and into the future years. And then you also have to decide that some process may need to change. Is the form that you were using before, the information that you're capturing, still relevant? Are those questions useful? Is it a policy that's outdated now because of how your systems have changed, or how your constituents and your members actually behave? And don't be afraid of change. Change is hard, but we can't be afraid of it. And we can't follow the things that we've done in the past. As we've seen in the last year, following the same process as the prior year didn't really work out well. We had to adapt, and we had to adapt quickly. So back to some of the bigger pieces around data governance and change management. In order to get there, it's important that you define the data points and the segments for use across your organization. And I've got I'll put this in the chat after I'm done here, is another little article for people to just kind of get some beginner KPIs and some definitions there, a place to start. And then with that group, it could be members from your executive team, from your directors and managers, people that are most used to the data and the information itself. You can identify gaps in the information that you're missing, but more importantly, you can establish trust that the data that you're going to give to people is accurate. And that includes process improvement. It may take more time to do something up front, but the results and the time that you save later is measurable. And then also setting expectations for the distribution and delivery of data. Who sends what, from where, and how it's delivered. Matt had mentioned that there are several tools out there that can be used, but there is also Excel and charts and graphs in Excel. People have their trackers, but it really does come down to setting a standard of where you're going to keep this information, how you're going to keep it live, and how you're going to keep it accurate, and in what forms you're going to deliver it. We are all, as finance professionals, we are all very used to seeing information summarized in an Excel format. But there are new ways to look at that information and different ways that we can present it. The biggest piece also is prioritizing a roadmap as you're making these changes. What information is going to be impactful? What's the order of operations you need to receive and enter this information so that you can use it? Does it require policy or process changes? And it's always going to be a continuous scope, refinement, and adaptations. Another point that you heard earlier too, is it's okay to take risks. It's okay to make these changes, but you need to be able to identify when they're successful and, more importantly, when they weren't. It's okay to make bad decisions if you discover them early and are able to pivot quickly, fail fast, and make the change quick. And above all, as an organization, as our organizations adapt new technology, it takes time and it takes commitment to change, and that can never be underestimated. It's hard for people to see the changes immediately, and the work, it does take time to make those changes. And it's taken us as an organization several years to start seeing efficiencies come back into play. It's a lot easier to write a note on a Post-it and stick it on your desktop and your computer monitor than put that information in the system that it can be used later on. And with that, I want to actually pass this over to my colleague, to Jill, on actionable data and how you build that confidence in data. And she could show you all of the great examples that they're using.
Hi, everybody. I'm Jill Davidson. I'm the Director of Information Management Systems here at the Mandel JCC of Cleveland. We have been using Traction Rec Salesforce now. We were lucky enough to start in December of 2019, which means we had 3 months under our belt when COVID hit. And reporting became critical for us, and having that single source of data that Marina talked about really helped us to get through the initial crisis of figuring out who did we have to refund, who could we ask for donations, who would we be crediting their accounts, and keeping track of things. And we've developed over time, even before we were using Salesforce. And I'm going to talk a little bit more broadly than just financial. Everything I'm going to talk about fits with financial reporting, but also fits with reporting throughout your entire agency, which a lot of times we're all called on to do different parts of our role. And I imagine there's people who work in the fiscal department who are doing reporting for other departments that may be non-financial also. So what I'm talking about is parallel in all of those processes. So data integrity. You have a single source of data, but is the data good? And as fiscal people, as IT people, we understand the phrase data integrity, but a lot of our program staff don't necessarily understand what that specifically means. And so I like to use the language, does it smell right? And a lot of times I'll ask my staff when they get a report, or I've written a report, does it smell right? And I'll give you some examples as we go through, but that's really critical, because if it doesn't smell right, then you got to do some digging and figure out what's wrong with the report, or to be able to clearly say it's not wrong, it feels yucky, but it's not wrong. So really that is, I think, one of the overarching things of writing reports and reading reports is you can't just always take them directly for their word. You need to really think about whether the data is correct. And like I said, the data, does it smell right, is my guiding force. So the first question is are we putting in our data and are we doing it accurately? And when we moved to Traction Rec and Salesforce, there were many more moving pieces and parts to track. And we needed a way to make sure that what was going in accurately. And we've developed what we like to call the zero dashboard. And every single day, many of my departments in my agency start their day with the zero dashboard or end their day with the zero dashboard. And this was run this morning around 10 a.m. And you can see we've got some things that we had to clean up today. And having this front and center in a dashboard that we're regularly looking at really allows problems not to build up. So a good example, we use MindBody, and Traction Rec syncs with MindBody for our personal training sessions. So this first one here, does not sync or sync error reports, means that something didn't go back and forth and I need to look into it to figure out why. We're good on our active billing to make sure that if they're canceled or comped, that it all works out, those purchases. There are payment arrangements out there that don't match currently with what the billing should be. So we've got to look into where's that extra or that under $10,000 is. One of the things that can happen in our system is that payment arrangements can be set up, and when you cancel the purchase, you can forget to cancel the payment arrangements, and we could end up charging people. So this gives you, I think, a really good example of the types of things that we're looking at to make sure that our data is good and that we have complete faith in it. And we're constantly adding to this and working on it and making it figure it out. Usually it's a problem that we've found that makes us create something that goes on this dashboard so that we make sure the problem doesn't happen moving forward. So once you know that those types of things are taken care of and the data is being entered incorrectly, the next question you have to ask yourself is, when you're writing the reports, are they written to give you exactly what you want? And there's a number of things to think about. My Siri, apparently on my watch, also has things to think about. Let's take it off so it doesn't talk to us more. So the first is the skills of the report writer. Here in Cleveland, we've made a very specific choice, and we have the staffing to do this, that reports are written by the IT department, or sometimes the fiscal department also, depending on the specificity of the report and the knowledge needed to write it. We do this because our general staff don't understand all of the tables, the fields, the objects that are going into the data behind the scenes. And if they write the reports themselves, they're going to get the wrong data. Whereas our two departments are specializing in how these things are created and understanding the back end. And so having somebody who understands the back end of your database is somebody who can write accurate reports. Now, often I will write the base of the report, and I'll teach them how to change a single filter on their own. For example, you want everybody in every single zip code to be on this list, but then I show them how, if they only want one zip code, how they can edit it for that. But it's really important to think about the skills of the report writer. The next is the report asking the right questions? Here we have a report template request, and staff fill that out and tell us what they want out of a report. I like to call that the start of the conversation. Most of my staff don't know what to ask for, or they think they know what to ask for, but they're missing a big piece. And if they can have a conversation with me or somebody in my department who understands the back end of what we're collecting, then we can get them to the place that we're giving them really good data that they can use to make decisions. And I know Diane's going to talk about that in her presentation about how you use the data. And that's what this is about in terms of, are you looking for the right thing that you're going to be reporting on? And that's number 3, the conversation. And then, as I explained from the start, is once you get the report, does it smell right? I was working on a large report last week, and I was expecting the total balance of the report to be around $50,000. I got the report back and it was $500,000. There was a big disconnect for me. It didn't smell right to me, and I started digging in. In this particular case, the report ended up being correctly. It was my assumptions that I was basing on from previous years that was incorrect. It was a summary of where money was, or what money had been collected and what hadn't. And I was very surprised to see a large amount of money that hadn't been collected. Well, it turns out that given COVID and given a variety of things, they were getting money from a lot more external sources. And so therefore it hadn't been accounted for yet because the parent wasn't writing a check or putting in a credit card. So looking into it a little more fully gave me the confidence that it smelled right. And so that is a lot of the things to think about with data integrity, and make sure that your staff are always looking at things and thinking about whether it smells right or not. And with that, I'm going to throw it over to Diana, who's going to talk about how you can use that to tell your story. Go, Diane. Diane looks frozen. Or am I frozen? Diane's frozen.
I share my screen here.
Very good. She's back.
Sorry.
No problem.
You good? Can you see everything?
Yes.
All
Looks
right.
great.
All right, sorry. I'm Diane Newland. I'm the CFO at the JCC of Greater Pittsburgh. You'll see a progression on Matt and Jill and Marina and mine, and then Jason's at the end on what we wanted to share with this team. Thank you to all of them for teeing it up for me. What I wanted to cover and share with this group are really two things: dashboarding and having relevant information at the fingertips of our workforce, and impact reporting to our funders. Those are two things I wanted to cover. For this agency, and probably a number of you, we have overarching agency strategic goals. Matt mentioned them: liquidity, cash, operating net assets, and all of those high-level indicators. What I wanted to talk about is how we get information to our workforce and how they affect those different strategic targets, right? Because every single person, every single program, every single department, every single service affects what we do as an agency. And we wanted to make sure that in them performing their jobs and what they needed to have in information is at their fingertips. So how do we do that? And Jill and Marina covered a couple of things relating to integrity, things like single source of truth. Where do we get their information? Who creates the reports? What's on the reports? What do we want to do inside of the reports? Is it a detail? Is it a pretty chart in all purple for Bob? Is it some kind of list because someone's going to go out and make phone calls or send emails? Whatever that is, what we're doing as an organization. We also went to Salesforce and Traction back in December of 2019, a mere 3 months before COVID hit, as Jill mentioned. And we did that because we wanted a 360 view of the people that we serve. And, it's taken us a little bit longer because of COVID to get where we are today, but we are right now really focused in on dashboarding, partnering with our team in each of the programs and services, and really collaborating with them on what they need to see in the data, in the information, in the reporting to be able to better do their jobs. And obviously all of that folds up to what the agency is doing strategically and hitting our targets from a financial perspective, things like operating net, cash, liquidity, net assets. And then after that, I'll talk about some of the impact reporting we're doing for our funders, because it really is kind of cool what we're doing, and wanted to share that with you as well. So this first dashboard, and we're not going to get into the details, and there's about 5 other things inside of this. I took a little small snippet of what we are doing. We are trying to get back to pre-COVID membership units. And every day, every person they talk to, every sale they make, every retention they do, every re-engagement they do with any of our members affects these numbers. And it is a journey back to where we want to be from a unit perspective pre-COVID. That's the membership side. On day camp, we have a number of different day camp areas. We have a number of different targets inside of these areas, and our day camp director wants to see what the numbers are every single day, and what is her team doing to try to get the most kids in the most camper weeks throughout the summer, and how is she moving?
I'm going to be
needle.
cooking
So we have
downstairs.
other things.
You guys can stay here in color, okay?
We have other things inside of this dashboard that might be, year over year, returning campers, age groups, how many are new, how many are going to our overnight camp. There's a lot of additional information, but I couldn't share it all. The other thing that I think is important, I mentioned lists inside of what somebody may be looking for. You can see view report on all these tabs inside of here, as well as membership. If somebody wants to see what makes up that 2.4K of Squirrel Hill Day Camp weeks for 2021, they can click that report and see all the detail. And that's some of the things that Jill referred to too. So maybe they want to only see returning campers. Maybe they only want to see boys. Maybe they only want to see a certain age group. There's different things that we can do inside the filters inside of that detailed report. So that was the first thing. Like I mentioned, we are very focused on dashboarding for our workforce. I have two of my incredible team members on this call in Johanna and Lauren. I know that Jill and Marina know them well. If there's anything that we can do to help any of you, if you want to see a little bit more detail of what we're working on, whether you're in Traction and Salesforce or not, by all means, feel free to reach out to us on that part. This second one is what we're doing with our funders. We got through COVID. We got to this place past March 14th when we shut down. We got to this place in large part because of the support of our donors, funders, some new, some old. They helped to carry us and support us through this very challenging year. And one of the very large ones wants to know what we're doing, how we're doing, what we're doing with our money, what progress we're making, how we're really benefiting the community, and how their dollars are working to benefit the community. So I'm just showing you a couple slides. This is a slide deck of probably 25 different things, but it goes back to how do we tell our story? How are we telling our impact story? How are we telling how we're using our donors telling our donors that we're using their dollars? How are we moving the needle? What are we struggling with? How is community affected? It's all great stuff. And it's not all in one place other than this particular report that I'm going to show you. So it goes back to, and I love love where San Francisco is, that they're all coming from the same place, and all that information's coming from a single source. We want to get there for sure in Pittsburgh. We're very much not there right now, but we do have the ability to pull it all together and tell our story. We've done a really good job at that this year, and there's a lot of numbers on here, but we are speaking from our heart. So this particular one says what happens in one day. And we went from a thriving top JCC in the country, very fiscally sound, to our entire world crashing overnight. And I'm sure all of you experienced that. We keep this slide on this deck so everyone remembers where we were a year ago. One of the other things we do with this particular donor is tell them, what are we doing? What are we focused on as an organization? You talk about the pivot. There's a lot of things that we did on March 14th that we can't do still today because of COVID. But look at all this awesome stuff that we're doing from a life-sustaining work perspective. We went from camps and basketball and early childhood and dance classes and personal training and group X classes and all of that to blood drives and COVID tests and vaccines. We went to serving meals in our inside of our buildings for our seniors, to setting up within days of shutting down a grab and go environment where seniors could still come to our center and get meals. And all of them need to know how to connect. So we are part of a virtual senior academy environment here in Pittsburgh, and we are teaching seniors how to connect and how to continue to learn. These are just a couple snippets inside of here. I think telling the story to our funders is equally as important. Anything that anybody wants to learn about or see what we're doing inside of here, how we're telling that story, by all means, feel free to reach out to me on that as well. And we did have one more slide here. I just wanted to show you, we did have a core bet that we set up with our board strategically. And we did, this is just another view of what we're doing and how our core bet is paying off and continuing to tell our story. So with that, I'm going to kick it over to Jason in Houston.
Thank you very much. And let me get my screen shared here. All right, we good? All right, so I'm going to come at this at a little bit different angle. we have some amazing financial heads and IT folks. I'm gonna share a little bit about, okay, now great, you've got all this data in the system, but now what? You got it all in one place. How do you start to act on it and actually use that data to grow your business, to grow your community? So once it's all in there, you can start to make a little bit of magic with your data. So this was our starting point. When we implemented Traction Rec, they helped us put together this statement of account. So we had this on day one. It was great. You see Jose Altuve here. You've got a history of his purchases. He bought gymnastics for his little kid, and you could see the fees that were charged and the payments. All great. But after we went live and we started finding out new things that we needed to use our data for, a big gap was tax statements. All of us have preschools, we have camp and people need childcare tax statements. So we pretty quickly pivoted and said, okay, great, the data's there. We have it, but how do we just slice it a little bit differently to get to the information that we needed? And with a little help from Traction, we were able to slice that data to where we only got tuition-based programs onto a tax statement so that we can make that available for our members. But then going beyond that, that's fine and all. You print out a document, a statement, and you hand it to someone. That's great. But we all have an operation that we have to maintain as well. In the past, outstanding balances has been something that we've really struggled with. Echoing back to a little bit of what Marina touched on. In the past, with our systems, we've kind of had blinders on sometimes, and we didn't really have the most actionable data and a way to act on it, and things were happening kind of behind the scenes, and we were able to put band-aids on it and not really see what was going on. Now that we're on Traction, everything's all in one place, and it takes those blinders off. We now see what's happening behind the scenes. We're all acting on the same data. We're all acting from a single source of truth, and now we can start to build solutions to meet those needs. So outstanding balance was a big one for us. We never really sent centrally outstanding balances to folks. Instead, we sent lists, Excel document lists to all of our departments. And we said, hey, this is a camp person. And hey, this is a tennis person. Go collect that money, go deal with it. And of course, it got done with minimal results. So again, we went back to this Conga solution that we discovered is an amazing tool. And we said, okay, how do we automate this process? So we created this accounts list view. What you see is a list of accounts, and these are households. And that same data that we use to generate the account statement or childcare statements, we now have their outstanding balance, and we have their email address, and now we can act on it all at one time. So I can check off on the left-hand side the accounts that I want to send this outstanding balance to, or I can check off all of them all at one time. And then I just come over here to this handy dandy little button to email balance letters. Everybody that I have checked off, it's going to send them a balance notification via email, let them know that they have an outstanding balance, and include a link back to our community where they can pay that and take care of that balance. But everybody doesn't have an email, right? So this list right now is just showing me folks who we have a email for their primary contact. But we do still have a few folks who don't really utilize email and they want a physical letter. So we have a separate list for them. So these are folks that have a primary contact, or they're an organization or a business, and they need it sent to their physical address. So we have the same solution here. And instead of hitting generate email balance letters, we just hit generate balance letters, and we can send those out through the mail to those folks. But it doesn't stop at balance letters. Our membership department wants to be able to utilize this tool as well. So we built a very similar solution. So now for our membership renewals each month, We have the same process. We have an account list with everybody who's coming up with a renewal date of the next month. And we are able to batch send all of those email renewals, as well as send it through the mail for those that we don't have their email on file. This is a process that used to take us, take our membership department hours and hours every month. And now it's a simple click of a button. And building on the topic of dashboards, I did want to quickly go through a couple of dashboards that we use, or one dashboard that we use, and highlight some of these components. I'm going to highlight a couple, but I've got extras on here, but for sake of time, I'm going to jump through them, but they're on the slides. So as these slides are shared out, you'll be able to have a kind of a zoomed in look at what some of these components on the screen are. The one I wanted to highlight, because it kind of ties in with that zero dashboard mentality, which I'm totally going to steal. I love that. This is our version of a zero dashboard for our membership staff. So we have non-renewed annual membership units. So these are the folks that have a renewal the previous month. They were up for renewal, they were due. At the start of the month, this number might be, 50 or 60. You can see right now we're towards the end of the month and it's down to 10. So our goal for our membership staff is that by the end of the month that this number gets to 0. We don't want anybody to walk away and not renew. So these are our non-renewal folks. So they continue out throughout the month. So these are the folks that they're going to continue to call, continue to email, and just make sure that they know that they're due for renewal, with the goal of getting this to 0 by the end of the month. And then we've got a number of other kind of just KPIs that we use for the agency. So you see our camp billing schedules here. We run 4 drafts for our payments. So you can kind of see there are March and April, May, and June drafts and what we're expecting to collect for that revenue. We pull in all kinds of things. So it might be whether you're interested in preschool registrations, camp registrations, membership stats. That main dashboard that everybody sees when they log in are kind of key numbers that we use across the agency. And then we do have separate dashboards that then you can dial in. So if you're part of the camp team, then there's a dashboard that you can dial in and see specific information for that. Same thing for our finance, for membership, for preschool, for tennis folks. But for sake of time, I'm gonna kind of jump through these to the end here, and I'll leave some time for questions.
Does anybody have any questions for Jason, Diane, Jill, or Marina? We don't have much time. We have a couple minutes before we close out. We did get one question for Matt that came in, so I'm going to ask him if he can respond to that. Okay. Matt, I think you got that question from Dina, so you want to just...
Yeah, so I saw from Dina that there was a question about accounting software. And I'm sorry, Dina, I'm trying to scroll back through it. And hopefully everybody can hear me now. But I think, we see so many different ranges of software products, and it's not so much the individual software that you pick, but to make sure all the modules and add-ons are working for you. And often we have clients that might move on to another software, but are still trying to use it the same way as the old one. So I don't think that there's any one software product that's out there that I say this is the one that you need to have, and a lot of it's also dependent on budget. But I might open it up to others, particularly the other presenters, if there's. I think the question was specific recommendations for upgraded software, for upgraded accounting packages, and what works for you. But I don't, from an external standpoint and working with our clients and what they're doing, I think that there's options to use most of the major products, and I don't have any particular favorites. I'll say that.
Yeah, I think that's sufficient. I think there's certainly you can go into the virtual vendor hall and chat with Matt a little bit more about some specifics if you
Yeah.
have some specific questions. And the listserv is great for this kind of question. We do survey. We typically survey before the professional conference, but this year was very different. We didn't do our normal survey. And one of the questions we ask is what accounting software and other software packages people are using, and then we talk about it at the conference. But we didn't do that. But it's a good thing to throw it on a listserv if people have recently made a change in their accounting software and have some thoughts to share. So I think we don't really have time to get into a full-blown discussion on that now, but I just want to have a few closing remarks. I want to thank Matt and Marina and Jill and Diane and Jason. I think all this stuff was great. You're seeing some of the comments in the chat that people loved it, and they're going to be reaching out for, I think, some tutorials and sample reports and whatnot. But you really saw a lot when you really got a lot at a lot of different angles on that. It's not just the report you're doing. It's you have to understand what your audience, what the person that's asking for the report or the person that you're supplying the report to, what they really want. You have to make sure that the data that you're pulling from is going to give you a good answer, and you have to make sure that that it's timely and I don't know. There's a few other things in there I forgot, but a lot of good stuff. And I want to thank everyone again. Again, I want to thank Marks Paneth and Traction Rec for your sponsorship and support of the JCC movement. I noticed that Andrew Rogers from Traction Rec joined us about halfway in, and I think I saw someone else from Traction Rec maybe in our Stephanie Anderson. Very good.
The whole
Okay, good. I just saw you put something in the chat, so I picked up on your JCC name was not a JCC name. So, but anyway, thank you so much for your support and your sponsorship. Our next peer community session will be held tomorrow at 12:30 p.m. Eastern Daylight Time. The Zoom link is in the schedule on SpotMe. The topic for tomorrow's session is what hasn't changed in the past year, working and budgeting in an uncertain environment. Check the SpotMe app for more information. A quick reminder that the virtual vendor hall will be open today from 4 to 5 p.m. and on Thursday, April 29th from 1:45 to 2:45 p.m. All these times are Eastern Daylight Time, so I know some of you are joining us from other time zones. During these times, sponsors, including Marks Paneth and Traction Rec, will be available for live, engaging, and informative video breakouts. You'll see product demos and have an opportunity to ask questions about how vendors' products and services can best help your JCC. If you have a trusted advising session, use the link that was sent to meet with your advisor. JCC Cares is a first ever continental service opportunity that will take place today from 5:15 to 6:15 Eastern Daylight Time. Everyone is welcome to join this partnership with Repair the World to support initiatives with Neighbor Network and VAX volunteers. With Neighbor Network, JCC professionals will connect with seniors who are experiencing unprecedented isolation as we pre-screen seniors for local services and programs. Alternatively, you can help VAX volunteers update their site with vaccine volunteer opportunities. With new vaccine distribution sites opening daily, there are critical volunteer needs struggling against a decentralized system. We'll be helping VAX volunteers with state-by-state searches to identify new vaccine volunteer opportunities. Please join us for this important work. Before our peer community session tomorrow, connect with your colleagues and kickstart your day with our Mindful Motivator at 12 p.m. Eastern, 9 a.m. Pacific. Log on for your 15 minutes to set your intentions for the day and prepare to bring your whole self to a full day at ProCon. After a brief welcome, you can choose from one of several opportunities, including meditation, movement, or goal setting, and then spend 10 minutes doing just that. These sessions are sponsored by and will be led by instructors from Les Mills. I want to thank everyone for joining the session. We had a great turnout. And pretty much everyone hung with us until the end. And I think it was a great session and look forward to seeing you tomorrow for more. Thank you so much.